Bitcoin this morning steady after posting some of the biggest declines since the onset of the pandemic. We jumped some 14% as one point yesterday. The sell-off stoking fresh questions about this year's boom in cryptocurrencies. And our cross-asset reporter Eric Lamb joins us now. Eric, why are crypto enthusiasts so confident that we're not seeing a repeat of what we saw in 2017?
Yeah, the moves that we've seen over the last 24 hours certainly are reminiscent of the first bubble back in 2017, but the industry has changed and matured over the last 3 years. The biggest single reason that the enthusiasts point to is that we've seen much greater institutional interest and investment in the industry. That's something that didn't really materialize back in 2017, and that has changed the landscape a little bit now.
And what other forces might be affecting the price?
Yeah, it's interesting. For all that the industry has grown over the last 3 years, it's still a fairly small, immature, relatively illiquid industry. According to one researcher, some 95% of the Bitcoin is controlled by about 2% of the anonymous accounts that are able to be tracked on the Bitcoin blockchain. So the so-called whales still exert a huge influence on price moves. If a whale makes trade, it could affect the prices for to a great extent. So that's something that you don't see in kind of larger, more mature markets. So it still shows that Bitcoin still has a ways to go when it comes to being a really true large asset class.